Okay, hello everyone. As usual, let's do a bit of a wrap up on the week and see how things panned out. I'm going to look at gold as usual because that's what I like to do. Mind you, I haven't had a lot of time to trade this week, and I'll tell you why. I've mentioned that before as well, but it's good that you guys are up to date. One of them is CMA, the other one's Adea. CMA is actually under Adea, but we've started working with a hedge fund on our automated quant trading solutions for the crypto industry. Okay, this is just for the crypto and it's for large accounts, obviously. So this already started working, and because of that, we're a bit full on. Okay, and Adea as well, as you know, some of you know anyway. Those who don't know, we're a fintech for the timing of the markets as well. So we're looking to also get an investor on board for that one, and so on. All right, and there's a pitch deck for everything here as well, and that's why I'm a bit overloaded. And we're trying to get timing and pricing modeled up, and because we've got now live hedge fund accounts working with live results, it's obviously going to be a bit more easier for us. Okay, but let's take a look at today and see how things are panning out. So these were the swing days. As you know, I've posted those on the 25th of August. I also have everything up to here until the 5th of October, and I'm going to get working on October pretty much this week. So let's take a look. Tuesday, Wednesday for gold, Monday, Friday for euro dollar, Tuesday, Thursday for Bitcoin, SP 500, Dow Jones, and Nasdaq. They all got a Monday and they all got a Friday, and here the hours for it as well for every day. All right, so this was Monday hours, Tuesday hours, Wednesday hours, Thursday hours, and Friday hours. All right, so Friday I was expecting a bit of a mild day for the assets. That's pretty much how it turned out. As you can see, just a mild day. We're going sideways, but even if you're going sideways, as you know, I get these pricing levels from PST indicator or technical analysis, and also on the PST. As you can see, I've got PST on the monthly, which is pretty much spot on there. As you can see, the highest that did was actually, you won't see it there, but the highest it did was 90.36, and that's 90.39, as you can see here. Okay, and the high was 90.36, and it closed at 90.084. And because that's an extreme level, I didn't have a price for it, but on the price tag we had 3,655, so that was done. But anyone watching that with an alarm would have been fine. You would have been right on the dot. And I did have Tuesday or Wednesday as a swing day for this, and that's where it tapped in on Tuesday. Price bang down, and on a Tuesday, in fact, let's take a look from here onwards. So Tuesday, as you can see, the market spikes up. I didn't have a trading hour up at that price level, but pretty much the highs there, and then the market just sold off at this trading hour, as you can see, going to the downside all the way in. Wednesday was also one, so Wednesday was a retracement. Market comes back into that zone, sells off into Thursday, and then we're back there again on a Friday, selling off at trading hours again to the downside. Here on Thursday, market bought at the trading hours, and Thursday was volatile, as you know, because we had news on Thursday, and I did say you could set up your trade at 240, or I think it was 320, wasn't it? Let's take a look at Thursday. This is Thursday, 445 and 225. So this is 225 bar there, and this is 315. That's 445 there. So market makes a leap into there. Okay, and from 445 was doable. All right, right on there. In the video, I think I did mention this time. Okay, but even if you jumped in over there, you would have been fine, as the market drifted up into Friday as well, back there, and on Friday as well. As you can see, the highs again at trading hours. What we want to see is a trading hour where the market sold off before, so nicely sizzling down, sizzling down. Not a lot of movement, as you can see, but oops, but that's just how it is sometimes when you're at the tops. That becomes a distribution zone. So the distribution zone is just like going sideways, market is just testing and so on. If they sell again, we'll see how things pan out. This should be the next zone. On Monday, I think we also on gold. I'm not sure. We have to check it out. But for next week, if you're using the members area, right, always check what's coming up next. Okay, so that was to the 14th, which is tomorrow. So on Monday, it's going to be the 15th. All right, so you can check out when the swing days are going to be. And if it is a Monday or a Tuesday, whatever day it is, then if you're at the tops, you're going to be looking for like a Monday down from the highs. Okay, and then we're going to look at the pricing here, because these are the PST levels. Initially, we should be retracing to these blue dotted lines. And next week, we won't have a new setup. This setup will remain, but the daily should change, because we'll have that will close, so then we'll have a change in setup here, and we'll see how things pan out. But if the market starts selling, this is your zone, and those are your pricing, which will change, like I said, on the day, because this is the daily PST. Overall though, if you take a look, even in sideways conditions, if you just buy the lows and not muck around in between, buy lows, sell highs where the market sold off before, you should be okay with everything. Okay, as you can see, it's like pretty clean. With euro dollar as well, I don't do euro dollar and SP 500 or the indices. I just do gold. But if you're to take a look, let's take a look. We had the swing days for this as Monday, Friday. So if I go into the daily, this is your Monday and that's your Friday. So Monday market makes a high and then they sell off. I said in the videos, you can watch the videos on Vimeo, by the way, for the whole week. On the weekend, I make them available to the public, so you can check them out. I talked about this zone here closing, and that you can buy if the market comes down there as well, which was at 1668 I've got there, which is there. Here we go. And that is exactly a trading hour as well. So the market comes, closes the gap. It's a trading hour during the news, by the way, and then bang. Now also, if you took the timing course, you would have seen that 320. Okay, so if you take a look at your timing, then you would have seen a 320 move there as well. Okay, and that was a setup too, just like the 225, and then the market just boom takes off, as you can see on the euro dollar. These are the highs, market sells off, low, market going up, nothing really happening, because this is a mid zone. When you have something like this, what you want to do is you want to sell the high, buy the low, and if you're in between, don't muck around. Oh, by the way, for some of you who might not know, what I've done is I've added a technical analysis playlist. Here we go. Okay, a mini series on the technical analysis, which is like demand and supply. It's given us the cause and consequence levels. So when you match those levels to your swing days and your trading hours, then obviously those are the periods when you're going to trade well, because you got technical levels matching trading hours and swing days, obviously. So this course is well worth looking into. I think I've got about, 9 videos. Here we are. So that's the playlist there, here, mini technical analysis course. So you can watch that and see how you go. And I've got a bunch of case studies as well here as well, which you can take a look at. Okay, so the playlist is like pretty comprehensive. I don't do a lot of videos anymore because I think I covered all of the topics, so not much to talk about. And then what do we have here? This is a Wednesday. I said Wednesday might be a little volatile, but nothing really happened. Market made a high in New York and then sold at the trading hour to that target, and it's just going sideways afterwards. Tuesday, London sells off all the way into New York evening. Monday, being a swing day, didn't really have an impact. If you take a look at Monday, right, this is your Friday, Thursday, Wednesday, Tuesday, Monday, market just made a high. So that high is your swing day high on a Monday, which was there, okay? And on Tuesday, it just sizzled down, as you can see, at the trading hours in London. So pretty much worked out fine, selling off all the way into closing the gap, which I talked about targeting here before, okay? And then they bought from here. I did say you can buy from here if the time is right. So if you did so on Thursday at that news hour, you should have been just fine as well. Let's take a look at SP 500. We had Thursday or Friday on this one. Thursday or Friday, and Monday was mutual for all of the indices, US indices, and then I had Friday as well. So if you think about it, that's your Monday, market pushing all the way into Thursday, Friday, stalling there. It'll be important to check what next week is like for the indices. And on this as well, it's just a matter of plotting your hours, I guess. If you had entered at 4:45 on the news on this one as well, you should have been just fine, because at 4:45, bang, market just shot up from there, as you can see. So getting the hours right is important, obviously. And because this is an index, what you want to be looking out for is like the New York session. So for example, Monday, 4 o'clock and 5:40. Let's see what happened. Monday. That's your 5:40 right there. Market sells off. And the other one was, what was it? 3:40. Was it 4 o'clock? That's your 3:40. Whoops. That's your 3:40 there. So from 3:40 onwards, not that one, that one. All right, so 3:40 market is kind of like going up from London. It stops, sweeps London, as you can see here. Goes up, makes a high, and then we had 5:40 and then a sell-off into from 5:40. It can be volatile. If it's got direction, can push to 9 o'clock. 9 o'clock. Obviously, what's tricky here is you can see it's like pushed down into 9, okay? So what's tricky here is this. Here, are you going to sell or are you going to buy? It's a bit of a tricky question. Why? Because the market's done a big push down here, look. That's an impulse wave down. It's a big push. There are still some gaps here. The logical thing to do is when you got a big sale like this, as you can see, with us, is to head into 37.5, which is there, okay, 25, which is there. So this is your zone, which these are the retracement zones we'd like to see, because it's a nice discount zone. Market comes into this place after this retracement here, so, and then selling off. Obviously this is an intraday kind of move. Not really a great, trading opportunity, but, that's how it is. This is Tuesday. As you can see, market sells off in the opening, buys after the kill zone closure and going all the way up. Wednesday, let me see, I haven't even checked anything on Wednesday for this one. New York hours, 2 o'clock, 5:40, 2 o'clock on Thursday. That's your 2 o'clock there. Your 540. That's your 540 there. So that's the sell-off. Okay. This is a bit in the middle of nowhere because we're in the London box there, as you can see. But the market goes up and then sells off into also 840. I think we had. Oh, that's 10 past 5. And then we've got 849.50. So 10 past 5 is right at the top. There you go. All right, 10 past 5 is there, and that's 5:15 coming into 8:40 to 9. What was it? 9:15 or something, yeah? 9:50. And this is your 9:50 bar. All right, so that's like pretty much down here. And the market picking up from here, and as you can see, it's just going into Thursday, Friday. Now, as you can see, when we're doing all of these, pricing is also very, very important, and you've got to make sure that you're on top of your game with your pricing. Let's take a look at Bitcoin. Indices, you can check them all here, as you can see. Dow Jones worked out pretty good. We had Monday and Friday on that one. But let's take a look at Bitcoin and see how that pans out. With Bitcoin as well, what were the swing days? Let's check them out. Tuesday and Thursday. The hours are the same for everything. We just have to match it to PST pricing. Now with the Bitcoin, I did say, guys, we're having an ascending triangle, so we can have a breakout on this one. And that's exactly what happened on a swing day. Okay, so that was your Thursday. And I did say we should be going up then into this zone where we've got targets. And as you can see, we've got that 65 target, which is 116,907. 116. I'm just going to do this because Bitcoin's numbers are very tight. 116,907 is there. And we are pretty much on the dot of that PST level. So if you targeted it, great. Now look what I said as well. Guys, we've done all the PST levels on the weekly. So returning up from here is like logical to close the gap there. And that's exactly what the market did. So knowing that in advance can also give you, the hours to put a trade in. So for example, let's say Friday, right? Friday, let's say, what do we have? We've got 140. If it turns, we should go to 420. So we've got 140, 420. This is 140. 420 is there. So they're pretty much the same spot. And then some volatility, that should give us an entry at 635. 635. This is 635. Which should take us to closing, but might be a mild day for some assets. Takes us into pretty much the closing. Okay, this is 1 hour before closing. The target is pretty much done. Okay, so when you're trading like this, it's obviously easier to kind of see where you're going, not just in terms of price, but time as well. So time and price together, they give you a good match. Now, when you got stuff like this, you don't know whether to go up or down. You can always wait for a breakout or wait for a U-turn. This is why my bars are changing colors. Once I've got a U-turn happening, that was a trading hour, a U-turn happens. So entering here is okay, putting a stop loss under the low. It's still a very tight stop loss. Then you can follow it all the way into the next trading hour and the price correlation. And then you want to get out because then you understand the market can turn around. Okay, so you can pretty much do this on anything. Let's say on Thursday. let's say you're trading the US session, because most people are from the US. 225, 445. 445 is New York. This is 445. All right. So the market opens there, big push up, and then continues to go up. And that's basically it. You just have to match time and price. If it doesn't match your time and price, don't do it, because otherwise you're just taking greater risk than you should, and it's not worth chasing the market. So just make sure you understand where time and price correlate and enter accordingly. If you're not sure, wait for a U-turn. We've learned how to do that. Or you can also go to the small time frame and wait for an impulse and a retracement on, let's say, a 5-minute chart, and then enter then as well. Okay. Righty, I hope that helps. Have a great weekend. Any questions, dramas, feel free to drop me a line, and I'll see you guys next week.